Hello money magnets and master traders, welcome back to Uncle Charles' YouTube channel. I have a question. Will the Feds cut rates or will they pause? Tomorrow, FOMC is coming out at 2 o'clock p.m. Eastern time, and Uncle Powell is going to be speaking at 2:30 p.m. answering questions. And Uncle is expecting some good volatility to come in, some money making opportunities. Now, keep in mind, this is a price action channel. My job is not really to report the news. I leave that to the news reporters. I am a trader and I make content for traders like myself, and I like to give you guys my levels and setups and my trading plan for tomorrow so that we can make money together. Going to the 15-minute chart. Now, Uncle's gonna give you guys levels and setups, but you need to know how to use my levels, what are setups, and all that happy stuff. So setups are the triggers for entering a position. If we break down a support level, we enter puts. We play it level to level style with runners. And if we break out a resistant level, we enter calls. So if they decide, if the Feds decide, hey, we're gonna cut rates and the market is gonna be bullish, that would come in the form of breaking out resistant levels. And if it break out a resistant level, that's when we want to enter calls. And if they pause and then the market reacts bearishly, it's gonna come in the form of breaking down support levels. And when that happens, we want to enter puts. So for example, yesterday was a much better day than today, I want to say. But yesterday I had a 686 level, and I wrote in my Discord, 686 failed as support and is now resistant. As long as below 684.5 is in play. So when you see Uncle writing something like that in the Discord, that means to enter puts. Why? Because a support level failed. And what's Uncle basing it on? I'm basing it on the 15-minute chart. You can see right here on that 15-minute candle, the 9:30 15-minute candle. I'll zoom in a little bit for you guys to see. It broke down. It closed below the 686 level, and it gave us this beautiful move to the downside. That is your trigger to enter puts. So if the market decides to react bearishly to the news tomorrow and it starts breaking down support levels, that's how you know if you should enter puts or calls. Break down support equals puts. Break out resistant levels, we enter calls. I don't really have an example right now. Well, there is this one right here. This one happened yesterday at the end of the day. We recaptured a resistant level or broke it out. My 683 level gave a nice level move, but that was after market. I don't know you really count that. Today, there was a false breakout setup where we cleared 684.5 and then it broke back below 684.5, and it took all day to hit my 683 target. So sometimes when there's strong volatility, the actions happen fast. Some people like it, some people don't. And sometimes like today, when we're waiting on some news to be reported, the action can be slow. But tomorrow, I do not believe the action will be slow. The action should be fast. Okay, let's head to the daily chart. What's it looking like? Well, it's still overall looking bullish, guys. But I do want to say, if we are going to get bearish, today's close was at 683.04. So it didn't break down my 683 level. But if it wants to be bearish, it's going to have to break down 683 and my fib level at 681.39. You can see on December 4th low and December 8th low, we had some buying pressure there. Twice we found buying pressure from that fib level. But if we break down that level tomorrow, that is your trigger to enter puts based on the price action. And I do have levels at 680, 677, and 675.8ish. Now, this downtrend line, we had a breakout of that level recently at the end of November. So if it breaks back below 675.8ish, SPY will be in false breakout mode. And if we get in false breakout mode, a top will definitely be in. So watch that 683 level, watch that 681.39 level. If we lose those levels tomorrow, we are in pullback mode. We are bearish for the short term. And below 675.8, we are in false breakout mode. A top could be in, and we are bearish for the medium term. Now, this is an inside candle setup technically. So if the market reacts bullishly tomorrow, we need to stay above 683, clearing 684.5, and also the pivot high of the mother candle, Monday's candle, was at 686.6ish. We cleared those levels, we're likely heading back up to all-time highs. All-time highs was at 689.7. So if we break out those levels, we are bullish, head back to all-time highs, and it's a good chance we set a new record of new all-time highs. Triple Q battling around my fib level of 625, that will be the equilibrium level for tomorrow. If we are above 625, that is bullish, but there needs to be bullish follow through by clearing 627 and 629. If those levels clear, especially 629, we're likely going for the gap fill around 632ish with all-time highs, previous all-time highs at 637. Those would be my targets if we can stay above 625 and clear 629. But if we're below 625 like we are in the post market right now, and we start breaking down support levels like 623, 621, and 619.5, we're likely dropping down to 16.5, and the 20 daily moving average is around the 612ish area. Those would be my targets to the downside. Here is Tesla. Beautiful back and forth action. I say beautiful because it's definitely tradable. I don't know if you guys traded. The contracts are pretty expensive, not for the faint of heart, but if you are one of those people that trade Tesla, the levels I'd like for you guys to watch is 442.6. We're above it. So if we're above it, my target to the upside is at 450. And if we clear 450 tomorrow, we'll likely get to 459.2, 461 or higher. Those are my targets. If we are to get bearish, 444 and 442.6 must fail as support. If those levels fail, we'll likely drop down to my fib level around 435.3ish. Now you can see from yesterday's candle and today's candle, they did show buying pressure from that area. So a loss of 435.3 would be a massive win for the bears, and we'll likely go and retest the 20 daily moving average, which is around 423.5ish. NVDA recently recaptured the 20 daily moving average, and there was a downtrend. I had a downtrend. I don't know why it's not there. I had a downtrend line. There it is. Boom. I'll change the color to blue. That is a breakout from yesterday. My breakout level yesterday was 183.4ish. Today, around that area, it showed buying pressure. It's also where the 20 daily moving average is. So as long as above 183.4, breakout mode stays intact. Clearing 187 and 190 is bullish follow through. So if those levels clear tomorrow, definitely look to long or keep holding your longs because we're likely heading up a lot higher. 192, 195 or higher would be my targets. I would not look to short unless 183.4 and 182 fail as support. Those are my support levels. Those levels fail, look to short. 178.8, 177 and 174 are my targets to the downside, and there's a good chance we'll head down a lot lower. Watch out for the potential rug pull. Amazon looking bearish still, but even though it's looking bearish, of course, there's always a chance that Amazon can turn bullish, right? It's with any of these ticker symbols. It's looking bearish right now, but it's not guaranteed to stay there. Uncle's just reporting what I'm seeing in front of me. Now, we are riding down this downtrend line. One touch, two touch, third touch was recently. You can see from this blue line, I'll make it thicker for you guys. It's a red line, excuse me, this red line. That was a previous pivot high from September 9th. It was a pivot high. We treated it as support back on November 7th. We broke it down November 13th and we rejected pretty hard from it on December 2nd. That level is around 238.8. So bearish price action. Mind you, we got this downtrend line that we've yet to break out. And recently, we lost the 50 daily moving average. So we need to prepare for either scenario. It's looking bearish right now. What does it need to do to look bullish? It needs to get above my 229.2 fib level and of course break down this downtrend line. To break it down, it needs to get above 231. If it clears 231, 233, 234.8, 237, 238.8 or higher would be in play. I would be bullish above 231. But right now it's looking bearish, and if there is going to be some bearish follow through, 227 and 225 must fail as support. Those levels fail, we can expect more downside. We'll likely head back down to the 200 daily moving average, which is another $10 to $12 drop back to the downside. Here is Microsoft looking bullish. I will admit, Microsoft looking bullish. It recaptured the 20 daily moving average today, but we must be prepared for either scenario because it could change for FOMC tomorrow. If we are above the 20 daily moving average, which is above 490, stay bullish. 493 and 494.74 are my targets, and above 494.74 would be extremely bullish. We'll likely head back up above 500. If we are to get bearish again, the 20 daily moving average is at 490, so we need to break down 490, and I have a fib level or a buy zone around 487.7. If those levels fail, go short on Microsoft. Meta's looking bearish. It broke down a fib level, which was at 659.6. It also gapped down, which looks like the last three candle from December 4th, 5th, and 6th, or 8th. It's looking like an island. So this could be an island reversal. We will see. But as long as below 659.6, I'm overall bearish. And the next support levels I'm watching is at 656.5, 655, and 653.3. If those levels fail, that's your bearish follow through. But likely dropping another $15 to $10 to the downside, maybe more. And if you do want to get bullish, I need to see price recapture 659.6 and clear 661, and will likely pop back to 670 plus. Here is Apple. Now, we had a pivot high here, a recent pivot high that's not too far away. Okay, I was watching 276.7. Today, we retested that pivot high, which was a pivot low for today now. So we got to watch that carefully. 276.7. I'll change the color to blue. If it can hold, if it can stay above 276.7, I'll trust the bounce. If 278 and 279.4 can recapture, if that happens, go long with 281, 282.5 or higher in play. But if we lose 276.7 and we lose a 20 daily moving average, which is around 275-ish, I would be bearish on Apple, or more bearish, I should say. Here is IWM battling below that 252.2-ish level. If it's to be bullish and send us to new highs, we must clear 252.2, 256, 257.7 or higher would be my targets. If it is time for a rejection, 251 and 249 must fail and will likely drop down to 247.2, 246 or much lower down to 243 and 240. And last but not least, here is the VIX. The VIX has been low lately, but I don't think it's going to be low tomorrow. If 1710 clears tomorrow and 19.5 clears tomorrow, volatility is coming back, baby. And that's a good thing. We clear 1710 and 19.5, that's bullish for VIX. But if 1710 rejects, trust the rejection only if it breaks down the support level at 16. And before I let you guys go, here is the DarkPool level. Let me refresh this. Okay, most of the activity, it didn't break a billion, but most of the activity came in at 682.92. Uncle had a support level around 683, so it's not far off from my own level. 682.92 is the DarkPool level. Above it, we are bullish. Below it, we are bearish. Guys, thank you so much for watching. Let's kick some market makers' ass tomorrow. And if you want more content from Uncle Charters, check the pinned comment below. Join Uncle's family in the Discord, and let's be limitless together as money makers, money magnets. Peace.